And good morning, everybody. This is Jamie DeLugash with the Earnings Player Live Market Open webinar. It is Tuesday, August 16th. Hopefully everybody had a good weekend. We're back at it this week with our first trade, TJX companies reporting results that actually beat expectations, but a little bit light on guidance, has that stock lower in pre-market trading. So it looks like the first trade of the week is going to go against us. But we've got plenty to talk about, 3 more trades to make this week. We don't have an iron condor to place this Friday. That's a little bit of a bummer, unless implied volatility pricing in options for later this week changes. We won't have an iron condor, but nonetheless, we still have a full slate of earnings trades to make from both the green sheet and the hot list. And we can talk about those trades and really anything else you want to talk about. Last week, as you know, we were having some difficulties with the webinars. Hopefully those issues were resolved. There were some changes made, I guess, by Google Hangouts, things that I needed to do as from an administration standpoint. Got those instructions yesterday and took care of that. So hopefully we're good to go on sound. If I could get a sound check from everybody, that would be helpful. Good morning, Ken. Adrian, no, there's no video. What we do here on the live market open webinars, these are real time, done right before the market opens. And then for the first 30 minutes of trading, I share my screen with you and we go over to Yahoo Finance and look at the trades that way. That will be the only image you'll be seeing, and you'll get that once I share my screen with you after the market opens. So I like to see the Ys. Thank you, Ken, Rich, Adrian, Patty, and you're seeing you now you could join the Blue Man Group, Patty. Then apparently, let's see. Adrian says, were we talking about TGX just now as our first loss? Yes, at least in the pre-market trading, guidance being a little bit light, looks like TJX will be the first loss of the week. We have 4 green sheet trades to make, including TJX. So as is and will happen with trading earnings, there will be losers, there will be spectacular losses. These trades will immediately go to capital recovery mode. We'll see if we can get some capital recovery before expiration. We certainly have 3 or 4 more days of trading to go. We'll see what ultimately ends up happening on TJX. Okay, so looks like the sound is working. Looks like folks are getting settled into the room. We're about 4 minutes away from the start of trading today. The market is pointing to a lower open across the board, although only fractionally, which again continues the theme of low volatility in the overall market. There just isn't a lot going on, and in fact, this has been the summer of Yellen. And the summer of Yellen is still alive and well and grinding us to new historical highs on the major market averages. It is interesting to note that the Russell 2000 small cap index is still about 4% away from its historical high. So you don't have the quadruple indexes reaching historical highs, but the Dow, the NASDAQ, and the S&P are all trading at historical highs. And all of those gains can be attributed to what I've been calling the summer of Yellen, where the Federal Reserve has been very careful to make sure they don't stir the pot in advance of a very important election, at least to them, and their autonomy has them acting not apolitical as they are supposed to, but very much acting politically. And because of that, you have traders confident in what policy will be which means they can trade with a risk-on attitude and a bullish, I guess, bias for stocks. So whether or not those gains are justified or not, earnings, though down overall year over year, are better than what analysts were expecting, and those numbers are supporting valuations to a certain degree. So it's all very interesting from our standpoint for earnings. Really, what matters is that you have very low volatility in this market, which means it's going to be more difficult to reel in the big winners. But that doesn't mean we can't have the good 100% to 200% winners. We're just not seeing the 300% to 500% winners in any sort of meaningful way that we can reliably grab one on our lines and bring it into our boat. So that's sort of the summary. I do think the market is long overdue for a pullback, and maybe that's what we're seeing here today. We've been getting these little 2 steps forward, 1 step back kind of trading. That was the trend last week. And it looks like after a nice up day yesterday for stocks, although it should be noted there was weakness in the last hour of trading, that looks to be continuing this morning. All right, the market is now open for business, and as predicted by the futures, you're seeing lots of red across the board on the S&P. The Dow's down about 40 points to start, and the S&P down a little more than 5 points. Again, you're talking about 25 basis points, nothing to get too excited about. Let's see. Adrian has a question on Home Depot. Do we look at the minute chart to decide if we should close early? Adrian, that's a good question. And in fact, that's really why we're doing these market open webinars, is to help you with your exit strategies. There are subtle nuances to exiting a trade, but I'll go ahead and take a look at Home Depot and help guide you through what should be your exit strategy for Home Depot. We suggested call options on Home Depot. The stock or the company did, in fact, beat earnings estimates. I didn't see it doing too much in the pre-market, and I'm not sure in a downward bias with red across the board for the major market averages, how that'll impact Home Depot. But we like to wait. We're not looking to get out of the market in the first 30 seconds of trading, or the first 5 minutes for that matter of trading, Adrian. It takes time for markets to settle, and we accept whatever comes our way with trading and usually it's the first 10 to 15 minutes. And if you're new, what we're looking for, and I apologize if this is repetitive for other folks, but what we're looking for is a nice base to form in the new share price after earnings are released. And from that base, then we can formulate an exit strategy depending on what the situation is. So, but like I said, I will guide you through that. And with the market now open, I can share my screen and we can go over to Yahoo and take a look at how not only Home Depot is doing, but TJX. So let me refresh my screen here. With the Dow now down almost 60 points, you do have, well, it looks like all of the indexes are down about 30 basis points. So there's no really divergence in the major market averages. Starting with TJX, again, they did beat on earnings. So I'm a little bit optimistic that what you're seeing here is related to weakness in the overall market. The stock is down $2.50, a little more than 3%. That puts this one in the losing category, given that we have call options, and therefore immediately we go into capital recovery mode. And what does that mean? For those that are new, capital recovery mode is our approach to dealing with a losing trade. When we make an earnings trade, we accept the fact that we can risk 100% of our capital. In fact, the expectation when we're doing an expected value analysis on a two-outcome event is that you're going to have 100% loss. That does sometimes change, so it's not an absolute, but just for our purposes here, let's just assume it's an absolute. So you're accepting the fact that you're going to lose 100% on your trade. Well, that doesn't necessarily happen until expiration. And so given the fact that even though we're using weekly expirations for the most part, with this trade being placed on Monday after the market closed, you essentially have 4 days of trading to recover your capital. And specifically, what we're looking for when a trade goes to capital recovery mode is we're looking for 50% recovery of our capital, which again, even though you're accepting a loss of 50%, is obviously much better than taking 100% loss on the trade. So in the case of TJX, let me just go look at where I clocked TJX. It was the 8250 calls at $2.15. So the first step is to recover to the 8250 mark at $2.15. 50% recovery is a little more than $1, which means we're going to need to see $83.50 on the stock. So I do this frequently with our earnings trades where I'm referencing the underlying stock in our trade as our guide for when to exit a particular trade, whether it's a winning trade or a losing trade. So in the case of a capital recovery trade, you do that quick calculation where you take your strike price and then half of the cost of the option. So in this case, the option was $2.15. Half of that would be $1.07. Add that to the strike of $82.50, and you get $83.57 as your true 50% break even. The stock, given that we're dealing with weekly options, will not have any sort of significant time premium, and therefore the stock price as your guide for the value of your option is a pretty good rule of thumb that you can follow when you're doing this on your own. So for TJX, again, this one looks like it's going to be a losing trade, is a losing trade. We have capital recovery needed for 50%. We need the stock to move up to $83.50. And in this market, that certainly can happen. Although I now see the Dow is down about $78, $79. And unfortunately, TJX is being profiled on CNBC as we speak. And usually when that happens, you see a little bit of selling. And sure enough, the stock dipped initially when they first started talking about TJX. And but we're holding the $80 level pretty well, which is encouraging. So like I said, we're on the lookout for $83.50 here, and that or those are my early thoughts on TJX, and we can revisit that at the top of the hour. As for Home Depot, those shares are slightly lower. You did have the stock, it looks like it opened at 137.65. So it did open in the green, which is an interesting move in and of itself. but I do see it now down. Well, now my Yahoo real-time, I've been having trouble with real-time quotes on Yahoo, and there we go. I had to refresh my screen here to see it now down $1 a share. So you're down to 136 on Home Depot. You didn't have a lot of implied volatility, so the bad news is right now the trade's going against you, but there should be well, I'm not sure what option you were using. I was looking at the 137s at 205. So the 137s at 205 are going to be underwater by about $1. To get 50% capital recovery on that, we would need 138. So you're looking at you need a $2 swing in Home Depot for the trade to recover capital. But just like TJX, it's going to be the same kind of analysis. I was using the 137 option that was priced at right around $2 a share. So that's how I get the 50% recovery at 138. All right, so that's really all I have. Let me go back and look at your questions. If there are any questions, comments, what have you. Let's see, it looks like I'm caught up on every comment that you had here. So trades to make today, we can talk about that in the green sheet, and as well as we have two trades, two trades for the green sheet in CRE and Staples. Both of those we're looking at the downside with put options. CRE is holding up its value here in a downward market. Dow down about 40 basis points here. So CRE is tracking the market, which actually is a pretty good result for CRE, especially in front of earnings where volatility is going to spike after the company reports earnings. We're looking for a big miss here and a potential 10% move or more. I noted that this one, if there was a whale trade to be had, this one had the most whale potential, if there is such a thing. And I say that because disappointing earnings here have usually been met viciously by the bears, and a double-digit loss on any disappointment is the most likely outcome. You still need the disappointing result, and in this market environment, the odds are in our favor for some sort of miss or reduced guidance or what have you. But now with the stock down only 5 cents, it's outperforming the rest of the market. NASDAQ now has slipped even further, down 10 basis points more than the S&P and the Dow today. So with a 50 basis point or 0.5% loss in the NASDAQ, the fact that CRE is holding its own is good for us in advance of buying put options. Staples is another one that I think is going to plunge after results, although the implied volatility of these options, because it's higher than what it is for CRE, the whale trade potential here is a lot lower. What you're going to have is a nice 100 to 150% gain. And as we are experiencing a loss to start out the week with TJ companies, I think it's important to reiterate one of the, I think, highlights of trading earnings, and that is that your winners have much greater potential to win than your losers will lose. And that's where almost across the board allows you to analyze these trades and generate a positive expected value. And then that gives you the luxury then to trade those positions that have the highest expected values. I would really suggest for those of you that have been with me now for several quarters to start playing around with your own probability analysis and assigning probabilities to certain outcomes, calculating your own expected value of these trades. I think just in general, whether you're trading earnings or just making an option trade outside of this program, I think that's a valuable skill and tool to add to your tool belt when you're making any sort of option trade. Is factoring in statistics, probabilities, and expected values. In fact, that is the primary driver of what makes the Earnings Player program work, and it's why we endeavor on offering earnings trades during earnings season. Because of the SEC requirement that every publicly traded company release earnings on a quarterly basis, you have a never-ending stream of possible trading candidates. And so you can be doing that analysis day in and day out. And we may consider, now that I'm just thinking out loud on this, it may make sense if there's demand for doing coaching sessions on expected value. That might be something we can do during the off season, again, to get you better equipped for analyzing your own earnings trades. I'll have to talk about that with the publisher, but that might be a good idea. But again, you all are in the driver's seat. I'm here for you. If that's something that you want to see, demand or make a request of the publisher, send that in, and then we can act accordingly. All right, we're about 15 minutes away from the top of the hour. I was looking at Staples and Cree. There's no real change. Both of those shares are trading at the flat line in advance of their earnings reports. So the recommendations that were in the green sheet are going to stick. If we can go back and look at TJX, just curious. Some small recovery now that it's no longer being covered on the television on CNBC. You have $80.37. So we are making our way to the right spot here. It might take some time. I wouldn't write this one off quite yet. The market, let's see, the Dow is down 72 points at the moment, or 39 basis points. The playbook for stocks in this environment, the summer of Yellen, even on down days end up being, by the end of the day, they might start out stocks down anywhere from 75 to 150 points on the Dow. That's usually what we're seeing in the first half hour to hour of trading. By the end of the day, those losses tend to be reversed, and in some cases, we even go positive. But the losses are cut down substantially by the end of the trading day. To the extent that happens here, I would expect TJX to close closer to $82 a share. I would say $82.50 is sort of my aggressive goal on TJX by the end of the day today. Again, what you had here was a little bit of a management faux pas. The company did very well in its earnings report, but for whatever reason, well, I know the reason. Management teams like to lower expectations, and so they're willing to take whatever consequence comes of that in the near term for I guess, a looser rein with respect to running the company for the longer term. And what that essentially means is, by lowering expectations, it gives them plenty of leeway when it comes to operating results in quarters down the road. So again, it's a little bit frustrating when we're trading earnings and we're looking for a certain outcome, but just know that management can is certainly capable of manipulating things in a way that will negatively impact our earnings trade. So that's a little bit what's happening here on TJX. And Home Depot, for Adrian, is now in the green up to 137.35. So that's going in the right direction, Adrian. And I think that's a good example too of why we wait for the first 30 minutes of trading before we determine what our exit strategy ought to be. Now, I went through both on TJX and Home Depot, what my strategy would be for exiting these trades, looking for 138 at Home Depot, and on TJX, I'm drawing a blank, so let's go back to TJX. Yeah, 82.50, so 83.57 was, just call it 83.50 is our break even on TJX. But on Home Depot, we're looking for 138. And again, if the market, as I was saying, if it has the propensity to cut its losses later in the trading day, you don't want to jump out of this trade, because Home Depot is going to be one of those stocks that would benefit from a market reversal here. So those are my thoughts on both TJX and Home Depot. Dean says, thank you, Dean, for chiming in and suggesting that TJX may be a rubber band trade. I would agree with that, Dean. Although there are two things going against it from a pure rubber band standpoint. Number one, typically looking for the band that gets stretched, right? Because then the reversal is sharper. And in this case, a 2.5%, 2.75% loss on share price, even though it's a market reaction that I would not expect, it does not lend itself to the snapback that I like to see, where we can capture 25 to 50% in a short period of time. The other thing that TJX, I think, has going against it is the fact that we are trading in what I would consider overbought territory. And so I don't like to be buying call options again, unless the rubber band is so tight, and the losses on TJX would have to be about double what they are for me to get interested in TJX as a rubber band trade. But I like the line of thinking, Dean. And for those that are new, what Dean is referring to would be something we call Earnings Player Plus. These are after earnings trades, and let's see, there's some questions coming in. I'm losing my train of thought. So let me finish on Earnings Player Plus, and I'll get to your questions on DICS in a second. So with the Earnings Player Plus trades, we're looking for trades after earnings are released, where the market reaction was extreme, and we get a quick reversal in the 1 to 3 trading days, 1 to 5 trading days after earnings are released. They're a little bit different. It's an add-on service to the Earnings Player. If you're interested in that, contact Traders Reserve, and they can help you get access to that program. Yes, DICS, thoughts on DICS before entry later today. Tim, DICS did report this morning. So DICS, let's see, was a hot list suggestion on the put side, and the company is up almost 10%. So now, speaking of rubber band trades, I think DICS would be an interesting rubber band trade to make. And it looks like DICS had the holy grail of earnings reports. By that I mean they met on the top line, beating sales estimates. They beat on the bottom line with their earnings estimates, and their guidance was increased. Now, I was expecting weaker results from DICS, given the liquidation that was going on at Sports Authority. In fact, I have a young athlete, 13-year-old daughter. we'll buy a lot of sporting goods equipment stuff. And we did all our buying this season, the spring season, from April through the end of June. Really, the second quarter, we were going to Sports Authority because the bargains were so fantastic. We were not shopping at Dick's. So now one person doesn't make a market, but like Peter Lynch in the olden days of Fidelity's Magellan Fund, talks about buying what you know and in your neighborhood. And so the assumption for Dick's that had us on the put side was a short 1 quarter difficulties in their operations that clearly did not come to pass. And so this one is not working for us as well. So that's what's going on with Dick's. Robin asks, there is an extra cost for the Earnings Player Plus trades. I don't know off the top of my head what that is, but again, if you contact Traders Reserve, they can get you all that information, or customer service for the Earnings Player will be able to do the same thing and get you all that information. All right, we're about 6 minutes before the top of the hour. Let me give you my final thoughts on TJX and Home Depot. TJX is still hovering around that $80 mark. We're in capital recovery mode here. We're going to hold on to this trade until expiration. If you can get 50% recovery, it's going to take $83 and change, $83.50 to get you to 50% recovery on this trade. That could happen before expiration on Friday. So you're going to just continue to hold. There's really nothing to do there but watch. And if the stock does move in your favor, then you can use that 83.50 as your guide as to when to exit. I wouldn't trade if we get above 83.50. By the way, I wouldn't close immediately. The nuance for these capital recovery trades is looking for a rally beyond 50% recovery, where you might even get to break even. Crazier things have happened. So those are my thoughts on TJX. And Home Depot now is above 138.26. This is now starting to get into the territory of being a winning trade. I don't know the exact prices on this one, Adrian, so you're going to have to look to your own prices to help you with your exit strategy. But I would let this one run through the trading day today. We've already got the 138. Use 138. If it dips back below 138, I wouldn't let it get too far below 138, and I would just close the trade then at that level. Otherwise, go ahead and let it run to the close today. If you get up to 139, 140, I don't think you're going to get above 140 today, but certainly you could get above 139, 139.50, for example. I would then go ahead and close that one in the last hour of trading today. We do have trades to place on Cree and Staples today. Those stocks are, Cree's now trading slightly lower, doing worse than it was doing at the start of the day. And that's interesting because the Dow is now only down 54 points or 30 basis points, and you have a 90 basis point loss here on Cree. But not really enough to change your placing a put option at the close of trading today. And Staples, by the way, that little rally of 10 basis points in the Dow is why Home Depot, I think, is doing well. And Staples is trading flat in advance of its earnings report, and so nothing new there. Go ahead and place your Cree and Staples trades in the last hour of trading today for the green sheet. Because we do have live trades to make today, that means I'll be back tomorrow with another live market open webinar. So as per usual, anytime there's a live trade to be placed, I will be here to help talk about not only the trade, but then formulate an exit strategy for you as well. All right, that gets us to the top of the hour. Yes, Adrian, your position is expiring on Friday, but as I said on Home Depot, you're looking at turning a profit on that. And if that's the case, we always close our profitable trades before the end of trading, the day after earnings are released. All right, there is no green sheet today. The green sheet comes out once a week. It is delivered around noon Eastern time, and that will have all of your trades for the coming week. The next green sheet will be available next Monday. That'll be week 6 of primary earnings season, and then that'll be our last week where we have higher volume of companies reporting results, allowing us to make more trades. Thereafter, it's the after the primary season, we'll be doing 1 to 3 trades thereafter, ideally for another 3 or 4 weeks. All right, that's gets me caught up on your questions and comments. Good luck with all of your trading today, everybody, and we'll see you tomorrow. I'm going to sign off. This is Jamie DeLugash for the Earnings Player. Thanks for joining me today, and we'll see you tomorrow. Take care, everybody.